Hey, what's up, dividend investors? Mike Hiru here for Dividend Stocks Rock. Welcome to this new video on where did I put $1,000 this month. So starting last month, I created a whole new portfolio using the Dividend Stocks Rock methodology, using $1,000 into a new company each month, following the low yield high growth model that I've developed over the time to show you a real life case study on how you can build that portfolio and what it's going to look like down the road. So in February, I bought 4 shares of Waste Connections, which are doing okay, but I mean, it's just 1 month in, nothing much to say about that. But the company reported the earnings after I bought some shares. The earnings were great, so revenue was up 11%. Earnings per share was up 4.5%, and management initiated guidance for 2025, expecting organic revenue growth from 6 to 8% for the full year, which is great. Is Waste Connection is also growing by acquisition, so probably that we can expect double-digit growth again for 25, which is a kind of like reassuring considering everything that is going on right now on the stock market. So today we're going to talk about my next purchase, but just before that, I will have a brand new webinar on how to clean up your portfolio on March 20th. So it's 100% free. You can subscribe at dividendstocksrock.com/webinar. And during this webinar, I will show you how to get away from paralysis by analysis and actually have a clear 5-step methodology to clean up your portfolio, to have a more straightforward investment strategy, and feel a lot better about your stocks. So if you struggle with selling some of your shares in your portfolio, this webinar is for you. So just go at dividendstocksrock.com/webinar. All right, now, so let's move on to the buy of March. So I'm going to put my $1,000 on Franco-Nevada. The ticker is FNV, trading on both the Canadian and the US market. So what's their business model here? Well, it is a gold streamer. So it does not operate the mine, but rather own the land, let the mine operators dig in, produce the gold or other precious metals, and then pay a royalty to Franco-Nevada. So the company is mostly exposed to commodities. At 75% of their revenue is coming from the sale of precious metals, but without the risk of exploring, they're making a lot more money, and it's a lot more stable than if it would be a junior miner or a major company like Barrick Gold, for example. The company is mostly established in Americas, so North America, Central America, and South America, with 85% of its revenue and assets owned in those countries. In terms of mines, and that's the whole point here, is they have a lot of different assets. So not a piece of land is equal to more than 15% of their revenue. So if they have any problems with a specific piece of land, they will still be able to report good earnings. And we're going to talk about that in a second, because it actually happened not too long ago. And this is where the analysis of the dividend triangle comes in handy. If you look at the dividend triangle right now, you can see that the revenue started to stagnate not too long ago, and there's a huge drop in the earnings per share. So first reflex would be, Mike, why in the world do you want to buy this kind of stock? I mean, it's clearly not showing a perfect dividend triangle, clearly not the same level as Waste Connection, right? But here's the thing, when you see a big movement in the dividend triangle, it's time to dig in. So in this case, if you look a little bit closer to the story here and you see that the stock price dropped at the same time, well, they ran into a lot of problems with the Cobre Panama mine. Actually, it is currently closed right now, so preventing the company from generating any royalty revenue from the mine. In that quarter, the company had to register a 1.1 billion impairment charge due to the fact that the mine, since it's closed, is not worth that much. So this highlights the importance of having several assets in several different countries, because the geopolitical risk is huge when we're talking about mining precious metals. Franco-Nevada took a hit back then. It appeared as a buy on our buy list at Dividend Stocks Rock as well. And now since then, the company is getting back up, recovering, having a lot of momentum because there is a high demand for gold. And at the same time, well, the bad news are already priced in. So the only thing that could happen at this point is just positive news with Cobre Panama reopening and then Franco-Nevada making even more royalty revenues moving forward. So the bull case for Franco-Nevada starts with a super strong balance sheet as the company has zero debt. Having zero debt, having for $1.3 billion in cash and equivalent and another $1 billion in credit facility gives the company a lot of flexibility to buy new assets, recycle some old ones, and keep on moving. They also have the balance sheet to take any kind of hit, such as the Cobre Panama mine closing, without getting at risk of cutting off the dividend. The second thing is the company, on top of having this flexibility, has built a very strong pipeline. So the management team here is highly experienced and they know that they need to have new assets coming up all the time to maintain and increase the royalty revenues. Speaking of royalties, well, this is something that I love because it creates a lot of recurring revenues. So it's a lot more stable than having to depend on commodity price, and the company is able to predict a little bit better their cash flow coming in. On top of this, well, right now with all the uncertainties, with the tariff wars, with a lot of tension amongst a lot of countries, gold is in high demand. So we see that the price of gold keeps on going up, probably going to get at that 3,000 level mark that was supposed to happen actually in 2020 when COVID hit. But because gold is getting more and more popular and because I don't see any uncertainties being settled in 25, I think it's a pretty good timing to enter into this position. Also, the company has a very long history of dividend growth. We're talking about almost 20 years of consecutive dividend increases at this point. So showing once again that even though I'm not a big fan of commodity related companies, well, this one is really stable and can count on the royalty revenues to distribute that in form of dividend to their shareholders. Unfortunately, nothing is perfect, and Franco-Nevada has also a pretty solid bear case. And it's really important to understand when you're about to make a trade and add a new company in your portfolio to know what the downsides are. So the first one is, of course, the political risk. We just highlighted this with Cobre Panama in history. Seriously, it could happen several other times. You never know what's going to come up next. So this is always something that could happen around the corner. The second risk that I see is, while the company is debt-free and has a very strong balance sheet, it must constantly renew their assets. So this race to create a constant new pipelines of source of metals to ensure that the royalty streams keeps coming in is still a lot of pressure on the business. You never know if Franco-Nevada will be to effectively allocate their capital into highly paying assets down the road. Finally, if you look at the stock price fluctuation, you will notice that Franco-Nevada is not a stable stock. It is actually quite volatile, and if you're not up to invest into a company that is on a roller coaster ride most of the time, well, you should not take a look at Franco-Nevada. The stock price will fluctuate due to gold price fluctuation and also political tension. So there's a lot to bake in here, and it's not for the faint of heart. However, for the very long term perspective, this is the type of business that without any debt, with a constant stream of income, and a long history of dividend growth, it screams stability. You just have to be able to take the short-term volatility aside. So as the portfolio is shaping up, I have a question for you. What is your number one buy on your list right now? I'm looking at these days for my purchase of April. Maybe it's going to be National Bank that just reported bad earnings and the stock price drop. Maybe TFI International that looks like an interesting educated guess with the stock dropping about 30% as of late after a terrible quarter. Or maybe you're going to take a second look at TELUS. Maybe it's the right year where the stock price will recover. Who knows, right? So I want to know which stock is on your buy list. Just let me know in the comment section. That's going to be an interesting discussion before I report my next purchase. Do not forget to register to the webinar for March 20th. That is next week. You're going to learn how to clean up your portfolio, get away from paralysis by analysis, and why in the world it's so important. Because if you do not clean your portfolio, you will face several risks. So we're going to see that in the webinar, dividendstocksrock.com/webinar. Again, do not forget to like and to subscribe to this channel until the next video next Thursday. And until then, don't forget to stay invested.